Morning, everybody. Hope everybody's doing great today. My name is Dimitri Lockman. I'm the current chair for CGBN. I also serve as a treasurer for NICAR. I would like to introduce Ahmed Badat and Teresa Mueller, who are the past chairs of CGBN. Ahmed is going to be the moderator, and I'll be the co-moderator with him for today's webinar. Welcome to our April's CGBN webinar. Just so that everybody is aware, this session is being recorded. We ask that anyone who is not presenting or is part of the panelists to please mute themselves or turn off your recording. The format is over in an hour and a half. We will have a presentation first and then followed by Q&A. We will end the recording after Q&A and we'll go into the needs and wants, which Teresa is going to take over today. If you have any listings or trade missions, please let us know and we are happy to put it on the CGBN page. After this session will be recorded, it will be on the CGBN page as well as the CGBN YouTube channel. In the meantime, please put your information in the chat, such as the name, email, phone number, and your needs and wants. Now, today's topic is an overview of commercial real estate in Ireland. I'm pleased to introduce Donald McDonald and Enda Moore. Donald is a multi-disciplined real estate professional with 25 years wide-ranging experience, including property design and development, capital markets, valuations, proposals and managements, real estate lending, financial accounting, and auditing. Donald is a director in Dublin, Ireland-based Hookie & McDonald, where he has worked for over 16 years. Working on a range of client requirements, Donald is a member of Hookie & McDonald team that has advised on over $3.5 billion in investment and development transactions over the past 7 years. That is amazing. The firm is involved in both the commercial and the residential sides of the property market. Clients include a wide mix of institutional investors, lenders, builders and developers, government bodies, and private individuals. And this experience covers all aspects of commercial property and land, with his acknowledged expertise being valuations, professional services, and asset realizations. He has over 28 years experience of providing such advice to both public and private clients across the office, retail, investment, and development land sectors of property market. Again, I'm pleased to introduce Donald McDonald and Enda Moore.
Thank you, Dimitri. I'm Donald, and this is my colleague Enda. Hi there. Thanks to everybody involved for having us on and for coordinating all the logistics of this. And we are here through our colleague in IPAV in Ireland, Pat Davitt. Not sure if Pat is, I think he's in Hungary this week in Europe, so not sure if he's joined us for the call, but hopefully he has. So today the subject is an overview of the commercial real estate in Ireland, and we've done a presentation on it. And our Hookie & McDonald, which we're a member of NAI, the global network of NAI, and we trade under that for our commercial side of our business, and then Hookie & McDonald is the residential side of our business. So we're Dublin based here in Ireland. We employ about 80 people, and we've been around for over 50 years, and we've a lot of long-standing clients, and we cover, as we say, the residential and the commercial side. So if it's timely now, we might put the share screen and put the presentation on, Dimitri. Is that okay?
Ahmed, do we want to have a couple of minutes for introductions for other people, or are we good to go? You're muted. Still muted.
You're muted.
Yeah, sorry. Go ahead. We'll do it at the end of the...
We'll do it at the end of the... Got it. Yeah. So, yes, Donald, please take over, and Kathy.
Okay. Can you see that?
Yes.
Perfect. So I suppose I always find this this image on the right interesting because it shows where Ireland is, which is over on the kind of top left-hand corner in relation to Europe. We're part of Europe, we're part of the EU, which is a big, important part of kind of our global economy and how we interact with the rest of the world, including our trading partners in Europe. So you can see it's dominated somewhat by the Dublin side, which is the right-hand side of the country. What I'll do now is we'll give you a kind of an overview of. Just give me 1 sec here. Yeah. So what we do is we're going to just set the scene, which is some of the kind of the economic, give you a sense of the economic drivers and a background to Ireland. Then we'll have the office market, retail, industrial, land, an overview of the investment market, multifamily, and then a bit on sustainability. So setting the scene. As I said there, we have two maps here. Again, this is the satellite image, and it shows you where all of the kind of most of the economic activity and the domestic activity is in the Dublin region. You also have Cork, Limerick, Galway, and then Belfast, which is part of Northern Ireland, which is part of Britain, and the United Kingdom, as they call it. And the map on the right is the major workplace location. So it kind of just gives you a flavour for where the working populations of the state are during the day. Moving on, one of the big factors that's important when looking at Ireland is our population. Back in 1885, we had a population of over 7 million. And we lost millions of people during the famine. A lot of them emigrated, some of them to America, some of them to elsewhere. And what that meant was it hollowed out the population for decades. And what's really interesting is for the first time, when we did our census 2 years ago in 2022, for the first time in 171 years, our population, the Republic of Ireland, not Northern Ireland, but the Republic of Ireland exceeded 5 million, which is an 8% increase on the population from the census in 2016, which at a basic level, it's over 176 people coming into Ireland every day, which is on a net basis, which is quite a lot for a relatively small country and small population. The population is a big driver, and it is going to continue to be. There's a lot of countries in Europe and around the world where they're losing population. Ireland is not. And as you mentioned, the population is getting bigger, and it's estimated to get bigger all the way up to, I was at a conference earlier today, and it's estimated to get bigger up until 2070, 2080. So there's a lot to happen here. So that's going to drive commercial and residential real estate activity for many years to come. One of the main drivers of activity and factors that people are taking into account is the interest rates. We're governed by the European Central Bank, probably like the Fed in the United States. The European Central Bank sets the interest rates. As you can see here, there was historic lows from a period of kind of 2014 to 2022. And the challenge then was when the Ukraine war hit and inflation increased, interest rates went up, and that's been a very challenging place for real estate investment, certainly in Ireland and across Europe. Here you have the Irish kind of GDP. We call it, in this case, modified domestic demand, because it takes into account, we have a lot of foreign direct investment, which the modified domestic demand takes into account. And then you also have our inflation rate. So our inflation rate was high. It's going down, which is positive for people who are looking to invest. The interesting thing on this is the Irish state has very significant surpluses in the budget, the exchequer budget each year. There's a number of countries that don't have those sort of surpluses. You can see here that Denmark has surpluses, Ireland has surpluses, but overall the EU has deficits of -4. So we're in a different place to a lot of the EU area. The Irish unemployment rates are around 4.5%. So we're probably at full employment, because there's always a portion of the population that isn't going to work. So despite the headwinds in kind of global economy and the geopolitical situation in a number of areas of the world, Ireland's, the employment is holding up. In terms of, because Ireland is one of the only English-speaking nation in the European Union, we've attracted over the last, through tax-driven incentives and also through kind of quality of life and access to the rest of the European Union, we've attracted a number of multinational foreign direct investment companies. And there's over 1,000 listed. Some of the stats here, you've got 9 out of the 10 top global communications and technology companies, 8 out of the 10 top 10 gaming companies, 8 out of the 10 top pharmaceutical companies, say 15 out of the top 20 medical device companies. So we're big in a number of areas and financial services as well. So that foreign direct investment and these multinational companies drive a lot of the economic activity, but they don't drive everything. There's loads of other sectors, including agriculture and a number of other sectors that we're pretty strong in. And then just to finish off on this section of setting the scene, in terms of international rankings, Dublin and Ireland ranks very favorably on a number of areas. You can see there, small regions of the future, we're ranked number 1, European cities and region of the future for FDI, European Capital of Innovation Awards, Tech Cities of the Future, Global Cities of the Future, Financial Services, Brexit, Benefit Factors. Again, we're number 1 in that. So there's a number of areas that Dublin and Ireland has done very well over the last 20 so years and expected to continue that way for the foreseeable future. So we'll move into the office market now. Just in terms of occupancy, as we all know, since COVID, there's been a real change in how people use office accommodation. I thought this particular chart is interesting in terms of it charts, what occupancy rates are. You can see in the US on the East Coast, it seems to be saying 50%, West Coast 30%. In and around Europe, you can see it's kind of Ireland is DIE, that's 60, UK 60, Germany is DE 60. So we're in and around in line with kind of where the many of the European Union's peers are. And then you can see over here further on the eastern side, you've got China, Japan, coming at 85, both at 85, Hong Kong at 90. So interesting comparisons there. What we're seeing in the office sector is a number of themes. In Dublin, and because Dublin is the main area of economic activity, that's where most of the real estate activity happens, and that's a lot of what we'll talk about today is based in Dublin. What we're seeing is the city is somewhat oversupplied on the office side. Vacancy rates are rising, and that's been seen in a lot of countries and a lot of cities, as we know. The take-up was just over 125,000 square meters in 2023. Rents are under pressure in all sectors, and the take-up is below average. We've also had a kind of probably a development boom of office accommodation over the last 5 or 6 years, and a lot of them are coming to completion now, which is again adding to the challenges where you've got vacancy. So we would see that vacancy will continue to potentially increase as new stock comes online. And then what we are seeing is, the return to the office and what that looks like and how enforced it is, that's going to have an impact on sustainability. We'll get onto sustainability later in the presentation. Just in terms of the Dublin office market activity, the average take-up over 21 years is here with the middle line. So you can see 2023 is well below that average. And you can see in 2017, 2018, there was a lot of take-up. And naturally enough, the construction followed that, which has brought the construction sector, development sector into the challenges it's in now, combined with COVID. This is interesting in terms of the office delivery in Dublin, where you have, I've highlighted in yellow here, you have the pre-let offices. So this big 2023 delivery was what was delivered in terms of quantum, and only 36 was pre-let. And then 2024 delivery, okay, it's not as much as 2023, but only 28% was pre-let. And then 2025, only 33% is pre-let. So that's challenging enough in terms of, those stakeholders who are looking to secure tenants. There are tenants out there, but they're not that easy to secure, and they've a lot of choice. The vacancy rate there, as we've highlighted, is kind of in and around 15%, and that's way up on where it was over recent years. And then what we're looking at are prime rents per square foot, which you guys work in as well. You'll see prime rents in Dublin are kind of in and around 65 euros per square foot. And they would range from prime 65 out to kind of suburban office would probably be about 20,
yeah,
20
upwards.
Yeah, 20 upwards, depending on the quality and the location and transport connections. So in terms of what we've seen, which we've mentioned, hybrid working is having a factor, office take-up is down, but we are seeing some improvement in return to office. We'll just finish off here on just some recent transactions. Here was one of the transactions last year where you had an 81 million euro sale to the French investors Quorum, and they also bought another building in South Dublin. And these are two of the occupancy stats. This is a new building that was built besides one of the main entertainment venues in Dublin, the Three Arena. And you had Yahoo took a large amount of space, and the Irish Postal Service occupy the majority of that building. And then also over here, you had a major office transaction where you had Brookfield was involved in a very large transaction in Dublin city centre. So we'll move on to retail. So retail volume sales, as you know, it's driven by the economy. So some parts of the economy are not performing well, but there's large parts that are, and that is driving retail sales and activity. Leasing activity has been pretty positive in terms of across the city centre and the shopping centre.
Yeah, absolutely. Retail has performed, I suppose, surprisingly well. I suppose it has been one of the best performing sectors. Good volumes of sales really is what's what's driving that. And there are being significant deals in the likes of some of the prime retail streets, Grafton Street, Henry Street in Dublin, which had faltered a little bit, and people wondered during COVID what were the prospects for high street retail, but it actually has recovered quite well.
Yeah. So just to show that, just in terms of some of those recent occupier deals that Enda has mentioned, you can see kind of some of the kind of the global brands. Lego has opened a second store here in probably 2 years. Tommy Hilfiger has opened another store. Flannels, have opened that'll be their second store here. Pret a Manger have opened here on the food and beverage side of things. And then H&M have opened their home store, which is interesting to see them moving, not just supplying clothing, but into that sector. So again, so the retail investment spend was 400 million in 2023, which is its highest level since 2019. So what we saw kind of mid-teens, 2013, 14, 15, 16, there was a good bit of spend and it fell off. And then we're kind of onto the second buyers of retail. So a number of buyers who bought retail over the last 6 or 7 years are now selling out, and that's been picked up. In some cases, they've had to take hits on income, well, maybe not on the income, but on the yield. In some cases, on the income, depending on occupancy. But that's been the challenge, and I suppose we'll get onto that on the investment side shortly. And you can see prime high street yields have moved out to 5.25. This is the retail investment volumes. As we mentioned that just a minute ago, you can see 2014, 15, 16, 17, there was massive amounts of retail volume, and that fell off, not surprisingly, during COVID, and then through it's been gradually increasing, and there's expected to be a number of transactions this year. Here's two of the examples. Cleary's Quarter. So Cleary's is, if anybody has been to Dublin, to O'Connell Street, it's one of the kind of the leading department stores on the street. It's been undergoing refurbishment over the last 6 years, and they're kind of now in lease-up phase. They've taken on Flannels, the big kind of department store brand, and then Decathlon are opening their second store there, and they just signed a 30-year lease. The one on the right is just a smaller shopping centre in kind of one of the suburban northern provincial towns. So we'll get on to industrial and logistics. So I think it's interesting to see, you know, there's different angles on industrial logistics depending on the geographic location. While Dublin is undersupplied, Ireland is undersupplied, and it's the best performing sector in the Irish commercial market over the last couple of years. And it's expected to be very active again this year. And its demand is back with pre-pandemic levels. And you're also, as a result, you're also seeing rents are rising, 140 euros per square meter, 30 euros per square foot. And that's down to the lack of supply. And we'd expect to see that being held up over the next while. And as we say, take-up has been strong. And what you're seeing is there's good occupier demand, and that's translating into kind of high, very well-known investments, houses picking up industrial and logistics and targeting it at the moment and likely to do so over the coming years. So just in terms of the take-up, you can see it there where the take-up has been, and we expect it to be a reasonable year in 2024 with the 10-year average there. So we'll just do a small amount on development land. As you know, development land is the bit that drives any of the new activity around offices, retail, industrial logistics, and then residential. It is a big factor in the residential side of things. Development land, there was 500 million traded last year. Demand was strongest for smaller sites in the kind of the residential sector. Residential is seen as the safe go-to for a lot of development at the moment. And what's interesting is the state, because going back to what we said, the budgetary position in Ireland is quite favourable at the moment. So the state is buying up land to deliver housing. As you can appreciate from a political point of view, it's quite favourable to be able to say you're delivering on housing. Ireland, like most countries, is struggling to meet the housing needs of the population and supply affordable housing. There's the kind of the 5-year average on development land. So it wasn't too bad a year, but we'd expect to see more land trading this year. Interesting enough, and you guys in the States will find this of interest. So the top 5 land deals last year, the biggest land deal was a former hotel here, which was bought by the US State Department. So for 152 million, and that's a prime site in the middle of Dublin 4, which is the best kind of address in Dublin. And that's where the new US embassy is going to be developed over the coming years, which is great news as we would see it for Dublin. In terms of the investment market, so the macro themes, interest rates, debt market challenges, the attractiveness of risk-free alternatives are having a big impact on the investment markets here and across the EU. Real estate assets started repricing through 2023. There's some of that repricing continues to go on. You know, we're going to be selling an office investment in the coming weeks that was valued probably 2 years ago at about 50 million, last year at 40 million. And, you know, I'd like to think we could get 35, 40, but it just shows you the trend of where it's a suburban office, and that's where values are being hit. There was a total of 1.85 billion of investment trades last year, the lowest spend since 2013. And as we mentioned, industrial logistics has been very strong, and it was the largest transaction area last year. You're seeing private capital and family offices who are being a bit more opportunistic, where you have institutions who are cautious and investors are pulling back their capital from the funds. Private capital and family offices are standing in and are coming in, and private equity coming in to take the benefit from the liquidity in the market and buying up certain stock. And we have some slides around that. So capital availability is a challenge. The big challenge as well is capital for large deals, where interest rates are at the moment, debt isn't accretive. So you're not in a position, 4 or 5 years ago where you had interest rates were so low, you could, buy an asset, put 50, 60% debt on it and make pretty good returns. At the moment, that's very hard to do. So the people with equity are buying, and the people who don't have equity or limited equity are struggling. And as a result, the larger deals are struggling and people are left with assets. Hence, the next point, forced sellers, liquidity events. So if people have challenging, financial terms or challenging partners that they're working with, we are starting to see it. There's 2 office investments in the North Docklands where basically the money behind them have said, listen, we want our money back. So there's going to be a bit of that. I think that's been seen across Europe. Ireland is in a much better position than a lot of the European capitals. And we know that from dealing with some of our counterparts in France, in Germany, in the UK. While there are some challenges in the office market, it's nothing in comparison to some of the German cities and that. So, and we are seeing, because of the economic prospects, we are seeing capital coming in here. The traditional core sectors, there's as we've touched on, there's interest in them. There's also interest in the alternative, healthcare, living, transport. So it'll be interesting to see how they evolve over the coming years. The Irish investment market spends, this is shows the 5-year and the 10-year average. The 5-year spend, you can see it's down at its lowest level in that period. And then what's interesting then is what the breakout is. So you can see here, logistics 24%, offices in at 18%, residential at 20%. And then you can see on the right side here, this chart is showing where capital came from. So you've got US, you've got mainland Europe, you've got a good bit of Irish capital. So again, being opportunistic, knowing the assets and picking them up, probably at a discount. This is just a list of the top 10 investment deals. And it gives you an idea. Again, you've got private equity here, you've got KKR, Ponte Gadea. I'm not sure if you've heard of them, but that is the family office for Inditex, the guys who own Zara and a number of the other European clothing brands. So they have a huge pot of capital, and they're picking up they picked up a good apartment building for 100 million. They picked up this logistics park for 225 million. Again, you've got KKR, you have Henderson Park here, you've iPut, which is one of the Irish firms, you have the New York headed Angela Gordon down here. So interesting to see a number of the big capital houses, some of them selling, some of them buying. And we just have an example here. This is the one where KKR sold with its joint venture partner, PAM Capital, the Greenogue Logistics Park to Inga Investments for 110 million. The yield at 3.9, which is pretty competitive, you would have to say, given where interest rates are at. And talking about yields a bit more, you're looking at the change in the yields here. So you had Q2 in the light greenish gray, Q2 2022, you can see the lower side of these yields. And then Q4 2023, you can see the yield movement outward. So logistics, 4 to 4.75. Prime PRS has gone from 3.6 to 4.75. Prime offices, 4 to 5%. Prime retail, 4.5 to 5.25. So it's telling a story of where the investment market movements are for prime. I think it'll be interesting to see how these yields continue to move. There is an expectation that European Central Bank interest rates will improve over the next 9 to 12 months, but it's yet to be determined if that will be the case. So then multifamily, Hooker McDonald's, our firm does a lot of multifamily, and that's where we've sold a lot of our investments over the last while. We'll just give you a few examples of some of what we're seeing in the area. Some of the drivers is, residential completions have been at historic lows over recent years after the global financial crisis. Ireland was hit. I remember going to the multifamily executive conference in the States back in 2013, and you guys were well out of the the downturn. Ireland wasn't. The global financial crisis, because of the level of debt that we had and how exposed people were individually and corporates were, and the Irish banking was to debt, and the global markets, we took us years to recover. But the good thing is, as you've seen, and as we've talked about, we're in a much better position now, but we're still way off the kind of the housing supply side. So that feeds into the multifamily side of things. Also, just in terms of, this is always an interesting graph to look at. You're kind of looking at Dublin percentage of apartments as a percentage of dwellings. So where Dublin is only at about 30% apartments, for a European capital city, you can see the other ones listed here, or kind of peer cities, not just capitals. We're way behind, where you have Frankfurt, Bilbao up at over 80, 90%. Dublin is only at 30, and you can see the kind of list. Again, that's a driver for how we need more multifamily units. We've mentioned the Irish population growing rapidly. New dwellings are increasing, but not in line with the requirements. There's viability challenges there, which is going to keep stock levels reduced, and supply or investment in the residential sector fell dramatically last year. The state is now a very active participant, and the rental demand drivers are still in place, and inflation is slowing, but it had increased a huge amount over recent years. What we are seeing out of these bullet points, we can sum it up. There isn't enough stock. Private tenancies private landlords are leaving the market. A lot of the stock is quite aged. And then, as we mentioned previously, rent increases have moderated. This just shows you over since 2016, where investment has been. Multifamily came from nowhere up to be the lead investment area last year, and in 2023 and the previous years, but where that's kind of falling away, and we expect that to fall away now as a result of the viability challenges. In terms of where that activity has been, it has been in and around, this is Dublin, the map of Dublin, this is the M50, the main orbital route around the city, and this is the Liffey here, which anybody who's been to Dublin will know. And you can see that there's been multifamily investment. These are new build activity investments. There's been nearly 10,000 units built through these transactions that are listed, but there was also kind of direct builds, the likes of Hines, the likes of Quintain, a number of other developers have been building here. So this wouldn't include all of the multifamily activity, but certainly the ones that were forward sold. So there's nearly 5 billion of investments outlined on this map. And these are the lists. We can send this. This comes from our own research, which we can send to anybody who's interested. I'm not going to go through it, but just kind of gives you an idea. And it tots up to the kind of 9,500 units to 4.5 billion that we're talking about. Where yields have gone across these kind of 35 new build forward sales, you can see there's been quite a variance. That's gone up to about 4.75 now, and we'd expect it'll probably stay there for the foreseeable future until interest rates come down. And then these are the kind of there hasn't been many transactions, but this one was announced a couple of weeks ago. Hooker Macdonald's, our firm, sold this investment to KGAL, a German fund we were involved with selling to. And then last year there was only two real notable transactions, the one being the one to Ponte Gadea, which we mentioned earlier, and then one to M&G. And these are just two examples. This is the one we sold to KGAL last year, and then this is the one, the Ponte Gadea one on the right here in Dublin city centre. You can see why, high net worth family money would be interested in something like this. And these are just a few of the other examples of projects we've worked on over recent years. 211 apartments we sold to Starwood Urbio, the US fund Starwood. This one we sold to the German funds Union, 200 million, 435 apartments. And another one, this one we sold to Patrizia 2 years ago, just 99 apartments. Won't go into that one. Just we'll finish off on our last slide. Sustainability. As we all know, kind of sustainability, ESG is becoming more important because we're part of the EU. There's certain obligations that are going to be forced upon people across Europe. So it's looking at ESG upgrades, sustainability upgrades to buildings, what can be done, particularly offices, and they're being costed into asset values. Can vacant offices be upgraded or repurposed into different uses? I think anybody who's spent a bit of time looking at this know that's easier said than done. As we mentioned, there's impending EU regulation around this, including the corporate sustainability reporting directives for any businesses working in the area. We are seeing that kind of focus on well-being, which is factors in the ESG. And then one of the issues is valuing sustainability and ESG factors. And what we are seeing is a divergence between compliant buildings and non-compliant buildings, and that's going to continue. That's on kind of across all the asset classes, in particular office and residential. And then just to finish off, this in a Dublin context, 15% of the Dublin offices are grade A, with the remaining amount not being grade A. So, what does that mean for the future? So that's our presentation there. So hopefully it's given you a bit of a flavour for what's going on in an Irish context, and we would be glad to answer any questions.
Would you be able to share any information? Or I guess, Teresa, go ahead.
Hi, thank you for that very informative presentation. I was kind of half joking about Guinness before we came on, saying, I had visited Guinness, and when I was, I visited Ireland, and Guinness was one of the locations I went to, and they talked about their lease time frame. They, signed in 1700 of 9,000 years. So what I am wondering is what kind of lease structures you're seeing in some of these spaces, as well as acquisitions. Are people actually acquiring versus leasing, and have a lot of these variables changed since the pandemic? Are you seeing shorter lease time frames, etc.?
Yeah, do you want to answer that in?
Yeah, I think we have. I think certainly in terms of the likes of office, in the office sector, we've seen a notable move towards more flexible leases, and probably what we would have had traditionally in Ireland were kind of what would have been based on a UK model of longer term leases, office occupiers taking 20 or 25-year leases. What's much more prevalent now are break options and more flexibility, whereby you're getting certain, term certains of kind of more like anywhere between 5 to 10 years. And so I think it is, and that's a result, I suppose, of the market becoming moving towards more of a tenant market, where landlords now have to accommodate what the tenant requires in terms of flexibility. And I think we've seen certainly a pronounced movement in the office market towards much more flexibility, shorter leases, and giving occupiers the ability to grow and to evolve, because who knows, it's very difficult to forecast where things are in 10 or 15 years time.
And then on the retail side, it's probably a bit more, there's a bit of a mix there. It's something like bringing in kind of turnover. Yeah. Turnover sort of leases. Turnover
leases have become commonplace, I suppose, for retail. So that is, again, it's more of a partnering, a landlord and a tenant partnering together, rather than just a tenant signing up to a long-term lease and landlord never having to worry about the investment after that. So no, we've certainly been,
and all of that has contributed to the kind of a level of uncertainty around different asset classes that we're seen as core, that we're seen as very reliable. And I think that's one of the reasons why, when I've been at some of these investor events over recent months, if there's a survey done, of where are you going to put your money. A huge amount of the money, like 90% of the capital, is saying, well, we want to invest in the living sectors, which, you know, they want to divest some of their positions from kind of retail and office. And so that's an interesting dynamic that is going to run and run.
I do have a question. As far as repurposing, you mentioned repurposing office buildings. In Ireland, do they have self-storage there? Is that been popular? Because here in the United States, it is very popular.
Yeah, it's becoming more popular. It's not as popular, Peter, as like you will see it along, you know, some of the main motorways as you would in the States as well. It's becoming more popular, but not as big an asset class. And I suppose because we're not as big a market as some of the other markets in Europe, and certainly not the States. It's just an area. It's a bit of a niche area, isn't it?
Yeah. Has been to date. I think it certainly is expanding, but from a relatively small base.
Right. Thank you.
Are you saying the Irish are less likely to hoard like the Americans are?
Well, you know, it's funny because, like, even from the point of view of like our rented residential accommodation, it's generally furnished, so people don't accumulate. If you're a renter, you don't have a load of furniture and belongings. You move into that apartment and you stay there. When you buy a place, your home, wherever that is, be it an apartment or a condominium, as you call it in the States, or a house, you know, you probably keep your stuff within that. It's just not as big a thing here yet. Although I could probably do it myself.
What is the percentage of renters versus owners?
It's probably at about 30% renters.
Yeah, the residential side.
Yeah, and the residential side, 30% renters, 70% owners.
So I was also going to expand on that lease question, and just understanding the dynamics of your lease structure. So office space here, often when we put that together, that's a gross lease. We just say, here's the rent per square foot, per year. And whereas like retail, we might say it's triple net, where the tenant is paying everything. They're paying the rent, the taxes, and, the maintenance. Is that, how is it typically set up among the different asset classes in Ireland?
It would generally try to be excluding costs. Tenants pay the occupational costs. So be that commercial rates, be that service charge, be that insurance. Generally, and traditionally, it has been tenants who pay that cost on top of their rent. There is, where you see, there's some movement towards kind of more all-inclusive rents in the office sector, particularly in the likes of the serviced office sector. And there has been a growth in the serviced office sector in Dublin. We've seen, again, really driven by occupiers wanting flexibility and wanting, not willing to commit to long-term leases, therefore will take a 6-month lease in a serviced office centre or a 12-month lease. And on that basis, they would be all-inclusive rents. They would pay a rent inclusive of taxes, utilities, pretty much most occupational costs. But that really, that only occurs in the office, in the serviced office sector, or that subsector of the market.
I also have a question about financing, and everyone who does have a question, definitely raise your hand. There's that reaction button at the bottom. So raise your hand if you have additional questions, because I can ask 1,000 questions. But, a lot of times we come on these webinars to learn about the real estate in different countries, but, many also are investors, whether they invest within their country or outside their country. And so if someone is coming in to invest in Ireland, I guess, how would you be guiding them? Like, let's say me, I said, oh, I see that, you guys have multifamily in demand, which means perhaps I'd get increased rents. would I get financing? What does financing look like for me? So I guess explain that a little bit from an outside investor standpoint.
Yeah, there's two sides to it, and a number of, a lot of because we're part of the EU. There's certain advantages to the way investors looking at Ireland will set up. So they will either look to set up within the Irish tax structures, or they could set up within the EU tax structures. So they could set up an Irish vehicle for real estate investment, or they could set up a vehicle that could be based in, say, Luxembourg, or could be based in, one of the other countries in France or Germany. And that's, so a number of our institutional clients would do that. I suppose what they typically do, there's probably three sides to it. First off, what's the property? What's the asset class? Do I like it? What are the prospects for that? So we've kind of talked about offices, we've talked about retail, we've talked about multifamily. So what we do is, and we've done it with loads of investors who've never invested in Ireland before, you give them an overview of what the market is, you show them the opportunities, you talk them through the opportunities, and then, you're getting them comfortable. Personally, I always say to people, listen, the first one you look at, or the second or the third one, you mightn't buy it, but let's just go through the steps. So you'll talk them through, say, whether it's an office investment, what it would look like, what the deal would look like, what the pricing is, who the tenants are. And you do the same for, retail, or same for multifamily. And, the location and all of that. So there's that granular side of things. And then on the financing side, then it's kind of talking to their banks. There's two main domestic banks we have here, AIB and Bank of Ireland. They are fairly supportive lenders of international capital. So a lot of people would talk to them, but we also have the likes of Wells Fargo here, the likes of PGIM is here. So they're kind of under the radar, and unless you're in the kind of that commercial real estate sphere, you wouldn't know. The guy on the street doesn't know that Wells Fargo lends in Ireland, or doesn't know that PGIM lends in Ireland. But the guys who are sitting in London, or sitting in New York, or sitting in Frankfurt or Paris do, and they will liaise with them. In some cases, what they will do is, and it's become big business over here, is you will talk to a Deloitte, you will talk to a PwC, you'll talk to a KPMG, and they will help you. They'll help you in a number of ways. They'll help you on a tax structuring piece, which I've mentioned, which is really important. What's that vehicle going to look like? How are you going to get your money out when you need it? And how do you pay it? How do you have it as efficient a property investment as possible? And then you can also talk to a lot of those finance houses, accountancy advisory firms. They also have a debt side, the debt advisory piece. So I think with them, it's you're looking for them to give you some of the options, and it's no different to you guys. May have the same over there, but we're seeing that those firms are targeting real estate, and we know our clients benefit greatly from their expertise, because they will present, these are the 7 options you have to invest in Ireland in terms of real estate financing.
Thank you.
Matt?
Yeah, hi. Thank you. Great presentation. So question I have, we talked about you mentioned the population growth for the first time since the Great Famine in the 19th century. So what did you attribute that to? A lot of the migrants returning Irish from coming back home, or was this part of a European migration, or people?
Yeah, the population growth is it's down to a number of factors, really, and Enda might have his own view on it too. I suppose births exceeding deaths is natural growth. So we have natural growth in Ireland. But to see that population growth that we've outlined, you really, that is done by, as you've kind of highlighted, Ahmed, that's done by through migration. And we've seen significant migration patterns here. Some of that would be people returning. It could be people who moved to London in the 80s. I was at an event in London a few weeks ago, and it's amazing the number of people at it who they came over for the event from Dublin, but they now live in Dublin, but they probably moved back in the last 10 or 15 years. They went there in their 20s, their 30s, their 40s, and now they're back in Dublin. So there's a lot of that. There would be a lot of people who moved across the world over the last probably 30 years from Ireland. But there's also that foreign direct investment. So those FDI companies, particularly on the technology side, would recruit from all around the world. Because if you're LinkedIn and you're in Dublin, you're doing business. They're generally the European, Middle Eastern, the Middle Eastern and Asian offices and the headquarters for, say, Google, for LinkedIn. So they are doing business all across the world, including with companies all across, the Middle East and all across Europe. So if you're doing business with people in the Czech Republic or people in Italy, and a lot of those staff are going to come to Dublin to work. So it's amazing. If you walk through Google, if you walk through Facebook, if you walk through LinkedIn, it's literally like the United Nations. So a lot of those people have been moving here. I think, when did Google opened here? In probably 2003, maybe?
3, yeah.
So if you're looking at 2003, it's 21 years later. And now they employ probably, 6,000 to 7,000 people here in Ireland?
Yeah, absolutely. And I think that's a big element, is those companies, large companies with European headquarters here that are serving, they're serving the European market. And so as Donald says, their staff are, some of them are Irish, but they're just as equally Spanish, Portuguese, French, German. And so there's been a huge influx of workers into those type of large IT companies.
And we have favourable visas at the moment for, there seems to be, I think I'm not sure how many thousand, there's a lot of Brazilians here, there's a lot of Chinese here as well, have come there's favourable kind of investment visas that people can get, and then kind of learning English visas that the Brazilians and other South Americans can get. So they all add up to that kind of 175 people a day flying in here. And I suppose that's the thing. And the quality of life, I'm not sure when you were last here, Ahmed, but it's very much changed. And Teresa would have seen that. It's a very cosmopolitan place compared to what it was like in the 70s when you were here, and then in the 80s and the 90s. It's totally different now. And it's, it's a pretty good place to live, albeit it rains a good bit.
Yeah, thank you. No, I was there recently, I don't know, 4 or 5 years ago again. And I agree. Lots of change.
Yeah.
Yeah, definitely.
Awesome, Donald, and you have amazing presentation. Thank you for that. But I had one question in regards to the medical sector. Can you tell me a little bit more about, medical office buildings, surgical centers, hospitals in general? What kind of deals you have working in Ireland in general, or in that sector at all? If you have it, just curious.
Well, healthcare is going to be big, and I think anybody who, like, one of the charts that we didn't show, I had it in, but I thought it might be a bit over the top. It's our population pyramid. And the population pyramid, it shows that there's a big bulge of people in their teens, and then there's a big bulge of people, the biggest bulge of people early 40s coming up onto 50. So the medical sector and the kind of later living sector is going to be really big in the future here. And we are seeing that happening now already, where we have we were involved in a building. So Pittsburgh Medical they bought one of the kind of there was a private hospital here set up by a number of Irish consultants, specifically a sports hospital. and they sold out to Pittsburgh Medical last year. So that was a big deal. What we're seeing is a lot more private healthcare. The biggest private hospitals in Ireland are now owned again. I think it's by US companies. So again, they're looking, you're not looking at 5 years, 10 years. They're looking at 20 years, 30 years. And, if I had money, I'd be putting some money into that and into later living, because I think it's going to be big. And like a lot of places, again, it's building hospitals takes a long time. So, and so whether it's the Irish hospitals expanding, like a lot of the Irish hospitals are owned by the state, or in some cases by religious orders, but they are going to expand. We were selling a building last year, and there was considerable interest. It was it needed a lot of refurb, but there was considerable interest from two nearby hospitals. So there's a bit in that, isn't there?
Yeah, absolutely. And there's a deal potentially going through at present for an office building, refurbished office, a building that built probably about 12, 15 years ago, that the state are interested in buying. It's about 180,000 square feet office building that there's a deal going through at present on it. Again, it's both, as Don said, it's both public sector healthcare, and we're seeing the same thing happen with private sector healthcare, is increasing demand, increasing interest in that sector, and it will be a big growth sector, certainly. And
not surprisingly, that building that Enda's talking about is actually directly across the road from the one we were selling last year. So, again, it's between two hospitals. So, it's going to be a growth area, and it's not going to be easy to service or solve, because there's, it's a specific land use zoning.
I see. No, thank you for that. Appreciate it. Teresa?
So I know that we're coming up on the hour and we're closing out here. I wanted to talk a little bit about demographics and population. So I noticed in the beginning your slide of how many, what your population is currently in Ireland. And it's interesting because you're around 5-some million people. And in the US, there are over 30-some million that claim Irish ancestry. And in Chicago alone, which is the picture behind me, it's over 1 million that claim Irish ancestry. And which, by the way, when we have the networking session, I'll reveal at the end of the networking session what percentage Irish I am. I am a little bit curious about the demographics, because you talked about the incoming populations into Ireland. How much you're using that in your strategy of commercial real estate, and what tools you're using to assess demographics, whether it's ethnic background, age, etc.
Yeah, the census is a really big driver of that kind of analysis. We had our census in 2022. It was delayed a year because of COVID, and they're actually just drilling down on the kind of not all the census results are out yet, as hard as that is to believe, but I suppose there's a lot in it, and I think as a firm we're using it, and certainly the government are using it, and what we're seeing is private real estate investors are looking at that, and I think they probably see it as quite favourable, that it's quite a diversified population. And I think it's going to be, when those census results come out, it's going to be very helpful in terms of developing the strategy for the state, which they're reviewing the National Development Plan, which is the state strategic plan, and then also for people who are looking to invest as well.
Thank you.
Oh, thank you. Ahmed?
Yeah, so, I need to shout out for a bunch of people here who made this possible. So there was a presentation with IPAV with Boston Board of Realtors, and I really enjoyed it. And then I had this, thought came to mind. I said, why haven't we done Ireland, commercial in Ireland? So I reached out to Christine, and she was absolutely wonderful. Made the connections right away with Pat. David, thank you very much. Introduced us to Donald. And so we thank you for making this possible. This is a collaborative effort, and every month we're doing something from somewhere around the world. Next month is going to be a very interesting topic. We've got Russell Riggs from the National Association of Realtors. We're going to be talking more about that, and it's going to be legislative priorities that NICAR is dealing with. What's affecting our industry? What are the issues that are the hard button issues we're dealing with? So that is going to be, and we're going to cover kind of the broad base, what's affecting the industry, number one, and also we're going to be touching on commercial. Frank,
Then in June, digital nomad.
let me finish, please. This is an old brain. I'll lose my chain of thought. Frank McManus. Frank is our new global ambassador to Ireland and the UK. So I'm glad he showed up. And Frank, keep this dialogue going, this format this year, thanks to Bill Caton and Peter, who is a past president, to continue this dialogue and this exchange of ideas on the commercial angle that continues through CGBN, which is part of NICAR. Before I forget, Peter, unmute. Congratulations, everybody, to Peter. He's the Northern Illinois Commercial Association of Realtors Realtor of the Year. Congrats, Peter.
Thank you very much. Appreciate that.
And to all of our friends here who are, there's a lot of faces here that are regulars here, and we really appreciate it. Christine, did you want to say something quickly? Okay. Thank you. Thank you. Really appreciate your help. This is wonderful. Pat, did you want to say something? Unmute yourself, Pat. Pat, you're muted.
You're still unmuted, Pat.
Okay. Yeah, it's having a bit of a hard time.
If he's able to
we've
figure
got
that out.
we have an international audience here today. We've got connections with Portugal, Egypt, Nigeria, UK, Ireland. So, I mean, everybody's in the house, and Chicago, obviously. So thank you, everyone. Wonderful.
Great presentation. Thank you.
Back to you.
And adding on to what Ahmed said, in June, we are doing one combined with Illinois Realtors on digital nomads, which will be interesting to everyone since that's the nature of our life post-pandemic.
Teresa, can you hear me?
I can hear you.
Yeah, this is Frank McManus. And Ahmed, I wanted to thank you for the invitation to be here today and to join my fellow Irish colleagues and friends, and as well as Christine from our Ambassador Association and Pat Davitt, our CEO of IPAV. I apologize for being late. I was on a professional standards hearing. I was chairing it this morning and it ran late, but I look forward to the opportunity to review the recorded presentation. So I'll reach out to you, Ahmed, to get the link for that.
Yes, you will. Absolutely.
Have a great day.
And
Ahmed, I don't know if you can hear me now, Ahmed, or not. Can you?
Oh, yeah, you are, Pat. Go ahead.
Yeah, sorry. I'm sorry, Ahmed. I have a bit of trouble with this trying to get connected as I'm in Budapest in Hungary, unfortunately. But I really enjoyed the presentation from the lads from Donald, and it was fantastic. And congratulations and well done. We're delighted to be able to help and delighted to take part as well. Delighted that Donald did it on behalf of IPAV. And obviously, as Frank and Christine says, at any time we're quite happy to take part. If I was in Ireland, I would have had to come in your panel, but unfortunately, Ahmed, I could not do that today. But thank you. It's been very good.
Thank you. Thank you, Pat.